Kitco Mining's special coverage of Fast Markets lithium supply and battery raw materials is brought to you by Lindian Resources.
Canada has a notable advantage exploring for lithium, notes Rodney Hooper. Rodney is partner at RK Equity. Rodney, thanks for speaking with Kitco.
Great, thanks for having me.
Speak about lithium and Canada right now. It's been a real gold rush into the space.
Yep. It has. I think that historically Canada hasn't seen a lot of lithium exploration, but it's obviously highly prospective. It's even attracted a lot of Australians that have moved in. One of the other things that I think people really need to take note of as well is that you have flow-through financing, which effectively almost doubles the value of what you get for your shares as long as you put it in the ground. So it highly incentivizes exploration, and it's unlike any other area in the world that offers that kind of incentive. We've seen a lot of drilling happening, and we're starting to see some great discoveries there.
How important, I want to talk a little bit about the landscape in a minute, but how important also is downstream support as well, too, and the supply chain underneath that for supporting?
Yeah, I wouldn't jump ahead of myself just yet.
Yeah.
Obviously, there's some requirements for some vertical integration in the region. The IRA has turned that narrative into a very positive one. I think that America and Canada can work closely together. There are some fantastic regions like Bécancour, some hubs that I think could play out very well for downstream. But downstream is still, yet to happen at scale at all in Canada. You've had historically a little bit of it happen at North American Lithium. So I think that's the plan. And there's certainly potential and capacity in clean energy, but it is, step one is feedstock, it's spodumene concentrate.
There's the gold sector. Traditionally, that's been in Canada. It's been going through a little bit of a weak patch right now. It's been hard to raise equity. It's hard to raise interest in the space. So you see people that have been running precious metal companies, and they're now trying their hand at running a lithium, running a critical metals company. What is, if you've had some success in precious metals, if you had been able to drive a project, can you take that skill set and then take it over to a lithium company?
I think they are different. I think that there is certainly some skills that one can apply in the early stage exploration. But I think in terms of going beyond that, it will depend. It'll be interesting to see some of the new projects look like that they're amenable to dense media separation, so that is an easier sort of form of producing spodumene concentrate. So that might fly, but other than that, I would say, you need lithium skills.
Mm-hmm. Is that something that you're assessing when you're looking at projects, like what their background is? Because I imagine those people would be pretty rarefied.
They are, although, as I say, you've had an influx of Aussies coming into Canada, and the guys have had, quite a few of them have had experience, and they certainly can take it to a point. I think operating in different regions is always going to be unique, but I think they can certainly get the ball rolling, and they're also aware of the skills that they worked with back in Australia. So I think they could probably, again, Canada is a nice place to operate and live, so I think that they'll be able to attract guys to move over there or staff to move over.
Let's talk about lithium fundamentals, supply and demand. What's concentration dilution, Rod?
So what we've seen is there's been a slight increase in spodumene concentrate production in Q1. We'll see how Q2 goes. But what we're seeing is, and I think it plays into how it affects recoveries and how it affects penalties and pricing when you sell the spodumene. But the concentrate grades have definitely been falling. It's only Greenbushes now that produces a 6% con. The rest is sort of drifting down into the 5.3, 5.4. As I say, the uptick in how much you make or how much you can produce by going to 6, I don't think is sufficient to warrant producing a higher grade. So they're definitely producing a lower grade and taking less penalties on their sale price. So converters are working with it. I guess as long as impurities are within sort of reasonable bounds, we've seen a deflation in what's produced. Guys have definitely dropped grades.
Are we going to see more M&A in space?
I think it's now an absolute given. We've seen the OEMs start to get involved. We think there's still more to come. I think as far as Canada is concerned, I think it is a prime candidate for consolidation in that region. As you'll see, guys shake out into bigger hubs because demand, in the IRA, in the US and elsewhere, ex-China demand is substantial, so it makes sense to see more M&A.
Speaking about China demand, you in another presentation you said that BYD, the Chinese automaker, is quote killing it right now. Why is it so strong right now, and what does that mean for the critical mineral space?
So they have they planned well in advance. Look, there's a debate about whether you can include plug-in hybrids to be in EV cells versus pure battery, but on a
Well, back up for a sec as well, too, because in the last quarter that was announced by BYD, BYD combination electric vehicles and plug-in hybrids had about 100,000 more vehicles sold than Tesla's. Difference about like 440 versus 555,000 or something like that. As you're saying, yes, there's BYD seems to have a lot of momentum. So.
And so they sell plug-in hybrids on a pure battery electric. They're less than Tesla, but I think that's going to change in the near future. I think part of why BYD is killing it is that, their latest vehicle is an $11,000 Seagull, and it's just in essentially in a league of its own in that pricing space. So one of the things we always raise as an issue when people ask what are the threats to lithium demand, what are the threats to the EV thematic is, are OEMs going to be able to pivot in the $20,000 to $40,000 space or even less and attract the mass buying of new cars? Because it's one thing to tap out and sell a lot of EVs to high-income individuals in the US and elsewhere, but that market's finite. You've got to get down to the lower numbers. So BYD offers a very aggressive price point. So we think that they can and will take a good slug of the market, and that's why I say they're killing it. I think they're on track to be over 3 million EVs this year if you include plug-in hybrid and pure battery electric. So that's 3 out of 8.5, 9 in China. So they are really strong and they are exporting, and now you're seeing Europe balk a bit and react as the sort of China invasion of EVs comes into their market because they have aggressive price points.
Rodney, we've had an eventful lithium sector in 2023. We had the bottoming of prices and then the comeback up right now. We had, semi-nationalization within Chile right now, and then also the growth within BYD. Looking out, though, what are some of the top trends, or what are some of the areas that you're keeping an eye out in the lithium sector?
So one area that I'm an absolute outlier versus pretty much any analyst I've seen is the ESS, is the energy storage sector. I think everyone is way below the actual numbers. I think they are underestimating it in some cases by multiples, not even just small percentages. So that is one area I think that people need to take note of. In my opinion, as a total addressable market, it will be bigger than EVs within sort of 12, 15 years. So even this year, when I speak to contacts in China and elsewhere, I think people are already probably at least 50 gigawatt hours off in a year. Now you translate that into lithium demand, that can take you from oversupply to undersupply just in one sector. So that's something that I think is worth noting. And the other thing that is still, vexing is looking at all of these broker reports that keep talking about oversupply when they keep, assuming that most of lithium production is immediately battery-grade quality, which it just isn't. And they're also underestimating production scrappage at battery plants, because when new battery plants come on, they typically tend to have a high production scrappage rate as they find their feet and build up production. So a lot of it, has to go to recycling, and that is, materials. So I've always said, in my opinion, what you need to look at is cathode production, less recycling, because that is what true demand is, in my opinion, not installed demand. because that factors in inventory build, production scrappage, a number of things. And ultimately, if a cathode is made, there has to be lithium in it, and it has to have come from somewhere. Yeah. So those are kind of the trends, that I think are important: the grade deflation, energy storage, and the underestimation of what true lithium demand is and what true battery grade lithium supply is. Those are still areas I think people are getting materially wrong, and it's going to cause a big impact. So speaking to contacts around the world and traders we speak to as well, so we try and cover the entire food chain of lithium. We think later on this year there is a chance, and I'll call it a risk because it's never good, that we could have another blow-off to the upside in prices. And I say it's not good because it destabilizes everything and puts the OEMs under pressure. If you talk to most people, $30,000 to $40,000 a ton is kind of what people can live with. But we're slightly above that now, but there is a risk that we're going to have another rally again, and that, of course, is going to put a lot of pressure on input costs.
Rodney, thanks for speaking with Kitco.
Thanks very much for having me.
My name is Michael McRae, Kitco Mining here at Fast Markets 50 Lithium Supply and Battery Raw Materials Show in Henderson, Nevada.
Kitco Mining's special coverage of Fast Markets Lithium Supply and Battery Raw Materials is brought to you by Lithium Resources.